So today we're going to talk about a stock that I own that just came out with their full year results, and we're going to talk about what went on there and a little bit more detail about it, because it's actually a stock I mentioned the other day. I talked about this stock as one of the stocks I think at the moment is probably one of the best UK dividend stocks out there. But I said on that video that just be aware that this information is going to go out of date really quickly because the full year results are coming out, and now we've got them. Hopefully I can give you a little bit more new information on this stock, and I've got to say, with the results that they've just pulled out, which I thought were really good, I think it only increases that potential of that this is actually a really good pick at the moment, in my opinion. So yeah, with the new information out there, I thought it was a good update. So let's get started. So the stock is Catebox, and like I said, the results today were really good, but the share price was pretty stagnant. In fact, it was actually flat today. The stock did absolutely nothing on today's news. Now, you would hope that if the company keeps improving its financials, it's reflected in the share price. Today, that didn't happen. It looked like for a point it might do. The stock was up 5% at a couple of points, and I personally thought the stock would be up 5-10% today on the results they brought out, but it wasn't. It was flat. Now, for me, this is perfect because I can actually see the fundamentals improve, but yeah, I get the stock of the business at the same price as what it was on the previous financials, and that's a brilliant situation to be in. And I think sometimes people look at this really negatively, and you've got to imagine that over a long period of time, the share price will reflect the financials of the business. And I think a few people look at something like a K-Box, for example, which for the last year has been up 5%, and it hasn't really done anything, and people go, oh, it's a bad stock, it's not done anything. But really, you should be looking at that as a positive. You're having this company that's improving the financials, and yet the share price hasn't improved. And at some point, that will be reflected into the business. I saw something similar with like Hims and Hers stock, a stock that I own. It's my second largest position in the whole stock market, not just the UK portfolio. The whole portfolio is it's my second largest position. And I saw something similar with this stock. Not too long ago, people will talk about this stock as being a boring stock, a stock that doesn't do anything. If you look from the 12th of June to basically the 21st of February, the stock was up 4% basically, and you're getting towards nearly a year where the stock hasn't done anything. And there were people in that time frame going, oh, this is a boring stock, it's not doing anything. And I was saying, don't worry about it, don't be checking the stock every day or even every month. You're in it for the long term, and over the long term, if your company delivers on the financials, it'll be reflected in the share price at some point. And very quickly that can change, and look at that, boom, you look at the likes of Hims and Hers, it's up 131% in 3 months basically, and those snaps can happen so quickly, and that's why it's important not to time the market. You don't know when that big snap up is going to be, when it starts reflecting those financials, and that's why it's important to not time the market, is to play the long game really. And when you start looking at Catebox, it's very similar. There is a time frame where the stock has really slumped in 2022, but if you do look over the longer term, over the 2-year period, the stock is up 52%, which would be, you'd class as a decent performer. And with the end of the day, and by the way, if you do zoom out a little bit, you would say that Catebox is actually on an uptrend in the last year as well. When you zoom out, that is an uptrend. It's been a very violent move sometimes, and you will get that on a 70 million market cap, but it is in an uptrend. And at the end of the day with Catebox is that it's a special company because you're going to be picking up a 4%, well technically after today you're going to be picking up that 5% dividend yield. So even if the stock doesn't do anything, well, at least you walk away with a 5% yield, which isn't that bad at all really. So obviously you'd want a little bit more than that, but it's not the worst investment ever, I've got to say. So yeah, we'll have a look at the numbers anyway from and by the way, I just want to point out once again, I believe the stock is still undervalued because the company trades at 15 times earnings. If you look at something like a Greggs, for example, that's 20 times earnings, and I would say they're very similar businesses. And Catebox financials are on the same sort of level, I would say, as Greggs, but your dividend yield is a lot higher as well. And it's still currently 15 times earnings, and Catebox has historically traded at more towards 22 times earnings, which is I would say, I normally say 20 times earnings, which is even still less than the historic average of Catebox's numbers, but yeah, it's still, in my opinion, way below where it should be on a valuation point of view. But we'll have a look at the numbers, and if you have a look at the numbers, they were just so impressive. I mean, revenue was up 8.7%, and we talk about this again, and this was a time frame where we were expecting weak numbers. We've seen so many companies struggle at the moment. People are cutting back on spending. You'd automatically assume that a company that sells cakes would really struggle in a recession, or what was very close as a UK recession this year. And yet they're still putting in 8.7% growth. This is very good growth. A lot of companies in the UK wish they could grow at these sort of levels. What we saw as well is the improvement they had in 2022. So many ingredient increases, the inflationary pressures hit them, and now they've kind of passed it on to the consumer, or even a lot of them have come down. And what was more impressive, the gross profit was up 16%, EBITDA was up 15%, profit before tax was up 15%, adjusted profit before tax was up 10%, net cash was up 19%, obviously a very profitable, as you can see, a company that has a lot of cash on the balance sheet now, 7.3 million. EPS was up 10%, and they hiked the dividend up as well by 10%, which I think I called out on Sunday's video. So that was obviously really good. That's a perfect thing as you want a business. If you have a business that is growing revenue at good rates, profit at good rates, and then your dividend is also getting hiked up, that's perfectly what you want. As long as your company, if they keep doing this over the next 3-4 years and open up more stores, the share price has to be higher than where it is right now. And that's also not baking in that it's already a lower valuation what it's historically at. If they keep doing these numbers, the share price will be higher than where it is right now. And then the day you're going to collect a 5% dividend yield. So yeah, I think it looks very attractive when you do look at those sort of numbers. They said that they have increased their total number of franchise stores across the UK, 20 new franchise stores added, 16.1% in growth in online sales, which is really good, because what Cakebox did is they created a new online website. And if any of you guys went on the old website, it was terrible, and the new website is so much better, and that's clearly helping massively as well, with the big improvement in online sales as well. And they actually pointed to that a little bit more with also their marketing fund. I launched a couple of new products as well, as you can see here. On the outlook point of view, they said that sales performance continues to be robust, with trading so far in line with 2025 financial year 2025 guidance, which is obviously really good that we want to carry on seeing at the moment. Now, obviously, when we do look at the business from a revenue point of view, they've currently pulled the guidance of profitability off Simple Wall Street, or they haven't got any analyst data at the moment, which they should do, because there's plenty of analysts out there covering the numbers. But if they carry on growing at the rates that they are doing, obviously that's going to be really nice, and then that profitability starts going up as well. But balance sheet wise, I mean, it's just a cracking balance sheet. I mean, we talked about here, I mean, this says here that they've got the updated cash balance on here, which is actually pretty impressive for Simply Wall Street's standards. Obviously, cracking balance sheet, that's going to give them, 7 million's a lot on a 70 million business. Could even maybe throw a little bit into a share buyback. That's what I would like to see them potentially do as well, rather than just hiking up the dividend now. Overall, I'm going to have a little bit look, because I have not actually gone through the full Investor Day presentation yet. So I would be interested to get a little bit more information about some long-term targets, if they potentially have more plans to do with the capital. Like I said, I just mentioned the share buyback there. I don't know if that was mentioned today, but I will have a little bit of a look at that, and it'll be interesting once I have a little bit more, look into this in detail. But I wanted to just point out to you guys that I talked about this the other day, and I said that in my opinion, this is one of the UK dividend stocks you want to be looking at, because it's a really high yield with a growth as well. The perfect combination at a good valuation. And I thought, with the new information we have today, if anything, it just makes me more bullish. And I today looked at this stock and looked at it not do anything, and I thought, hold on, we've just seen that improvement, and yet the share price not reflect it. This is one that I look at there. I probably should buy some shares in at some point, and I probably will do this month, actually look to buy some more shares in it. So thought I'd point that one out to you guys. What I will say is that what I noticed today is that there wasn't that much talk around it. With a stock like Cakebox, I thought there'd be a lot more talk about it, when it's a full year accounts, and they're done really well. There's a lot of forums out there, and I expected a lot of people to be like buzzing over Cakebox. I mean, if we went on the London South East, for example, here, and we go on the Cakebox share chat, there's only like 2 messages on the whole board, which is very rare, because when a company brings out the results, it's normally like 30, 40. And you can see here, there's one post here that says excellent results today, which was at 8:30. Another one from a guy here today, which golf 33,333, which once again says excellent results, growing dividend, and well on the way to future growth. There was only 2 people that posted about it, and both of them were agreeing with me, like these are good results for this business, and especially when you look at the valuation. And I looked and thought maybe the only reason why the share price is being slept on a little bit at the moment is because there's not that much knowledge about the stock. 70 million market cap stock, and maybe it's not that well known at the moment. And when people start waking up and go, hold on, I can get a company that grows nearly double digit profit at nearly double digit, pays me a 5% dividend yield, and it's at 15 times earnings. Hold on, this is actually quite interesting. Maybe that's when people kind of pick up and go, you know what, maybe I should own this one, and then maybe that's when it starts, waking up a little bit. So we'll kind of see what happens there. But I did think the results were very solid, and I just wanted to add in from yesterday's video that it looks a very good dividend to stock. That it now 24 hours later looks an even, or should I say 48 hours later, it looks even a better dividend stock even now. So yeah, thought I'd point that one out with some more updated information. Anyway, hope you enjoyed it. Hit that like button if you're not here, subscribe, and I'm thinking about maybe talk about hims and hers tomorrow. So keep an eye open for that one anyway. Thanks for watching. Catch you in a bit.